Let's look at the internals now. We'll start with the daily chart. Now remember, this is a cycle 3, very strong cycle 3, because momentum on the weekly is positive, on the daily is positive, 4 hours and 1 hour now is positive. We're looking at these labels again, segregated. Market is moving inside of that Elliott structure. It's very bullish, so don't expect it. Over here we're showing that we are going, if whatever we are hoping to see on Wednesday does not materialize, if the Federal Reserve just raises by 0.25 basis point, the projections for the GDP are weak, things are not really very strong, then inside of that Elliott channel you retract back to 38.2%. Internally here we had of course a high degree 3, it did a 4A, 4B and a 4C, there was a 1, 2, a 3, that 4 will take you all the way to 106.7. Remember that 106.7 is the breakout high for the month. So of course fallback will test that. So it's a very strong buy at that level, even at 117.22 if the news is not strong on Wednesday. Alright, so that would be wave 4. We would buy and it would take you to wave 5 against that target 119.78 and 119.5. Ultimately we would cling to the upper boundary of that Elliott structure. So this channel line is at 38.2. If we do another one at 61.8, we're really always clinging to the upper boundary of that structure. It takes us to 117.8 and slightly below. Gradually takes you to 120 and 121. Let's take a look now at actually trading, the actual trade internals. We're looking at the pivot levels for March here right before us. And this is the current segregation that we're seeing on the 4 hours and 1 hour charts. This is an extension, of course, it's a wave 3, and that wave 3 is just pushing higher because of what's going to happen on Wednesday. The internals are correct, but there isn't really going to be a 3-4. If we get to see that level 117.47, 117.4, we are really inside of this very tight Elliott channel. This cannot be broken out of unless we have negative momentum on the 1 hour, and we're not getting that. Okay, so what are these levels? These levels are really the central levels inside of that pivot table for the week. This is the current week, trading week, 14th to 18th of March. If we get to see 117.82, it is just the higher noise band. 117.5 is the break, is actually a week open today, Monday. And 117.23 is the lower noise band. So if you wanted to constitute for investors, that is, if you wanted to let the current breakout on Wednesday buy and assume that's not going to be that very bullish, we would want to buy these lower two levels on that weekly pivot projection, the lower noise band, or the weekly open, and the lower noise band. The weekly open comes in here at 117.47. Over here that weekly open is showing at 117.5. The lower noise band, of course, 117.23. Over here is showing at 117.14. Both are at the lower boundary of that channel. We can just have entry limit longs there. Alright, and they should take us to 119. Over here, of course, inside the channel is showing at 118.64. 118.82 is the breakout high for the week. So the most appropriate target is just 119 or 118.82. This is a conservative position. It's a swing position. It may happen. It may not happen. It has a 50-50 chance. During the press conference, there's going to be a lot of volatility if it is not a clear-cut bullish day. So if the Federal Reserve, they just release the statement that they're going to increase interest rates by 0.25%, and then the chairman goes on into problems regarding global contraction and because of the war going on in Europe, and that trade projections and GDP projections are down, you get a lot of volatility. All right, the market doesn't really know how to interpret this. Is this going to be a bullish dollar or not? Ultimately, it will be a bullish dollar because they're still going to raise short-term rates and it's a strong yield vehicle. If we get to see these levels, this is what this is all about. If you get to see 117.14 or 117.23, 117.50 or 117.47, they're absolute buys. takes you gradually all the way to the breakout high for the week, 118.82. The green arrow here marks the breakout high for the month. Remember this level, 116.7, showing here at 116.67. Whatever we buy is going to be a very volatile day. The stop has to be below level 2 and below the breakout high for the month. So if the breakout high for the month is 116.7, you stop, it comes in here 115.8. So you're looking at something like, if you're buying 117.5 down to 116.8, 180 point stop for swing traders and for investors. This is a position trade again. Buying into this will take you gradually. If we get to see the levels again, there's a 50-50 chance because of the some kind of strong volatility. Okay, if the fundamentals expected do not measure up to market expectations, then we are able to fill these levels. Takes us to 118.8 and 118.65.